Hello, everybody. Looks like I am live. I don't think I'm muted this time. Last time I did a broadcast and I was basically muted for the whole time, so I had to redo it. But if you can hear me, just drop a yes down below. So that way I know you guys can actually hear what I'm talking about. What I wanted to kind of go through today, and I was talking to some people about building an exit strategy and what a proper portfolio looks like both during a bull market and what it looks like during a bear market and how you adjust and transition and understanding how to time the market. And it kind of reminded me that I needed to do that in this group as well to help all of you guys. So one of the things that I think you have to think about in this before I do anything is the market can be incredibly volatile. You'll never be able to time the top. You'll never be able to time the bottom. You just have to be able to mitigate risk along the way and make sure you get yourself out enough to where you are actually profitable and you don't lose everything when it turns into a bear market and the market goes kind of under for a couple of years. And so what typically happens is we'll have this big bull market that'll go to the moon. And I don't even think we're very close to being complete there. But what'll happen is people will start saying, oh, it's going parabolic. It's going to do this forever. We've got this perpetual cycle. It's going to be a bull run. It's never going to end. And then all of a sudden the thing will dump and we'll lose like 60% of value in a month and probably a month or two. And the people who get out and are smart are the ones who can reinvest back in and be set up for extreme success in the next market. And so if you time this right and if you build your portfolio correctly, you essentially put yourself in a position to where you need to work hard to build a strong portfolio for the bull market. Then you pull profits and you don't typically have to do anything during the bear market because you pulled so much profit from the bull market and you've reinvested back into the bear. Then when it pops again on the next bull cycle, you make 16 times more than you did last time. So it's really about timing the market and understanding that the big things that will ruin you are greed, because you're going to see it when we get to the top or we get near the top and we start going parabolic. People are going to get greedy. They're going to be buying all the way up. They're going to be saying it's never going to end. And then when it does dump, people are going to be they're going to be disasters. They're not going to understand what happened. They're going to call it a scam, but it's just the nature of the market. So when you're building an exit strategy in your portfolio, you need to understand that it's not always you're never going to be able to time the top and bottom, and trends can be broken. Typically, though, what we find with Bitcoin and even the alts is the trend is your friend. So if we look at previous trends, we can start to understand how to judge when we move out of our portfolio. So the first thing I kind of wanted to look at today is what the trends look like in the previous bull cycles. So let's go to this page. So what I did was I pulled up the trends since the 2013, 2014 bull cycle, and then I pulled up the 2017 bull cycle, and then I pulled up the current cycle that we're in, so that way we can all see it for Bitcoin. And then in order to get a feeling and an idea for what the alts are going to look like, I pulled up the charts for Ether as well, so we can kind of look at what the trend looks like for all of these. And so the first step in creating an exit strategy in your portfolio is setting dates, getting an idea for when it's time for you to start pulling out. And what I mean by that is you don't want to just wait, because what'll happen is you'll miss it and you'll all of a sudden lose 60% of the value, and you'll have to keep everything in there till the next cycle because you basically lost all profit. So when we look at this, it's I need to have a date established for when I'm going to start pulling from my portfolio. Then what you do is, and this isn't financial advice, so take it with a grain of salt, follow it or don't, but this is what I do with my personal portfolio. But when we start getting to that date you've set about a month earlier, you want to start pulling a certain percentage of your portfolio every day. We pull a certain percentage because you don't want to pull it out just all at once, because then if it keeps going, you miss out on it a little bit. But if you pull a certain percentage out every day, you ride the wave, but you also get out and take profits all the way up. So that way you don't lose your shit when you miss the top and it starts tanking, which is what we want to avoid in this kind of market. And this is what typically happens. Who knows if it will? I can't say for certain that anything will happen because crypto can be volatile, but this is typically what happens. So what we want to say is, okay, this is my month. I'm going to start pulling profits from Bitcoin. This is the percentage I'm going to pull every day. So that way I can ride it up and I don't miss it when it starts tumbling. And then you say, okay, this is Ethereum. This is the percentage of my portfolio I'm going to pull from Ethereum on my sell date or my drop date. And this is what it looks like all the way to get it out before it starts coming back down. So in order to understand those dates, what we need to do is we need to understand trends and understand what the market trends look like. We don't have as much data for Ethereum as we do Bitcoin, but we can still get a pretty good idea from what the previous trend looked like in respect to what it looked like in comparison to like Bitcoin. So when we look at Bitcoin in the 2013 bull market, what we see is around right here, March 1st, we really started to get a little bit of a peaking cycle in. So all of a sudden we see February 2013, March 2013, and then April kind of start to peak out. We went from $10 for an Ethereum. I bought it right. I bought Ethereum. Actually, I bought Ethereum over here in the bear market when it dropped back down to $15. But so you start to see it spikes from, we hit $19 and then we spiked up to 265, which was pretty solid. But then what happened was we went up, and from the like $15 range in November, January, February, March is really when it started peaking. And then April was kind of like the top in 2013. And then it went from its 265 down to about 86, 77. So that's about how far it'll drop, but that wasn't kind of the end of it. So we had the April 1st, May, June, July. We kind of had a couple of months start to come back up as it was peaking back up. So we had May, June, July, August, September. And then really right here in October, kind of like this year when things started really popping in the fall, it started popping again. And then as soon as we hit November, we rocketed. We went from $198 all the way up to $1,200. So this was insane at the time. And I remember this, actually, I remember the 2017, not so much the 2013. But as we went here, we went all the way up to 1239-ish. And it was October. Basically, you could say this was like an extension of this cycle, February to about April. Then we tapered down till about July, and then went back up until the end of November. And then October hit and we collapsed all the way back down. So we went from 1,200 down to 700 in a month. And then from December till about August, from December 2013 to August 2015, which coincides with the cycle, we went all the way down to $190. So if you can see, like if you miss this and you start tumbling, you go from 12 to $169, and you kind of miss the whole thing in 2013. But the important thing to note here when planning your exit strategy is we peaked in November of that year. That it's pretty important to know these dates because these are the dates you can use to anticipate what to do in the future. So if we peaked here in November, we had a little peak in April, like right now, February, March, April, which we're kind of in right now, which tells me that we're not even close to what the real peak is. Then we tapered off for a little bit, and then we launched back up in November. And then December was the dead month. Typically right before Christmas, the market kind of collapses. And then from December 2013 until about, I would say, August 1st, 2015, we didn't really see a ton of growth. And so as you can see, though, then we moved into the next bull cycle, which started arguably in 2017. So when we go into the 2017 bull cycle and look at this with respect to the 2013, that's the 2013 bull cycle. When you look at this chart, it looks way bigger, but that's the 2013 cycle. Now, when we look at the 2017 cycle, we have to kind of coincide with where it was at. But what started happening here was we started in 2016, August, you can see we started to trend upward. And then in May-ish, we really started to blow up. So we had, when you look at these candles, we had these tiny little peaks right here in June, 2016-ish, but then we didn't really start to get a big candle until right here about December 1st. Then January was a down month. February was better. March was a down month. March is always terrible for Bitcoin. And then what happened though was in April, we recovered. May, we started taking off again. And then June, July, August were good. September was a bad month. It dropped. But then we saw the peak of the cycle start happening in October, November, December. So if you remember from 2013, November, and then December, we fell apart. Same thing here. What happened? Well, we went October, November, December. And so what happened in December? Well, we went all the way up to 19,779. And then in that month of December, we dropped all the way back down to 9,187. So we want to pay attention to these dates because you can say, well, the market in this time period peaked in you could say December-ish. And so what interesting thing there is we had the November and then the December peak here. And then here we had the December, January drop here. So what that tells us is maybe it was about a month later than it was previously. So you want to pay attention to that. So the market could collapse in December. It could start going down in January. It could start happening a little bit earlier. But we want to pay attention to that because then as it started dropping, we went all the way down to $3,000 from 19,000 within November 1st, 2017 until about December 1st, 2018, which makes sense because we go in like 4-year cycles, 3 bear, 1 bull. And so that was the 2017 cycle. So then what you want to look now is where are we at today? What is our market? What does our cycle look like? And what are we going through? Well, when you look with respect to the previous cycles that's happening, let's see if we can even find 2013. Remember that 2013 that looked really big over here? And then remember how it looked really small in comparison to the 2017, like it's a blip? Well, look at it in comparison to where we're at today. You can't even tell that we had anything decent right here. Like that was the 2013 like peaking cycle. This was the 2017, which looks like nothing. And you can see we peaked in December and then we kind of got crushed. But when you look at today's, this is what this cycle looks like. And I think we're barely getting started with this whole thing based on previous cycles. But you can see as we started peaking, it was like May, June, July, August, September, October, November, December. Right here, we have our July 2020. It started really picking up in October-ish. October, and then November 2020, December, January, February, March. And so March, even though it didn't seem like a great month, it was still fairly decent with respect to Bitcoin. So what this tells me is we're on a pretty similar cycle as what we were on in 2017. So if we went October, November, December peak, we're not even there yet. We're still in the Marches back here. So it's like let's look back at this one. So when we look back at here, it was like January, February, March, April, May. See how this is the little peaking cycle right here? We have a big candle. April was a big month, or April was a recovery month from the horrific March that year. And then April, May was a big month. And then June, little recovery month, July, August, September, we tanked. And then October, November, December. So what that tells me is we're in a pretty similar cycle to what we were back then. And we're just getting started. There is no red this time, which is incredible. We have 1, 2, 3, 4, 5, 6 consecutive green months, which tells me that we're on a actual bull cycle. Like we're moving in the right direction. Our last red was September. And so what that tells me is October, November, December, January, February, March, each one of these candles gets a little bit bigger. In January, we had some corrections, and March wasn't the best month for a lot of alts and stuff like that. But what this tells me is we're on trajectory to see a peak somewhere around like, I don't know if it's going to be this late, but somewhere between like November, December-ish, I think we start to see the peak. We usually see the market get crushed in December. And so for me, I'm going to have a lot of my portfolio moved over to like US dollar coin in order to be able to prep for when this starts dumping so I can reinvest back in. And I'm going to set that as my date. Like my date to start getting out of the market will probably just be before Thanksgiving. So I can get out of it early. And I'm way early for the actual like peak or drop. Even if I miss the top, I still don't want to try to time the market and get greedy, because in the market, bears win, bulls win, pigs get slaughtered. Pigs are the ones that are trying to hit all the tops, all the bottoms, and it never works out that way. So when we look at Bitcoin, that's kind of what we want to look at in building an exit strategy for that. Let me see if there's any questions before I move on to talking about Ethereum and alts, because we have to look at alts and they usually peak a little bit later. So if you guys have any questions at this point before I shift over to talk about alts and Ethereum, just drop them down below and I'll answer those. But the best way we can get an idea of what alts are going to look like is by looking at Ethereum and what Ethereum has done in the past. in order to build ourselves a exit strategy.